Hello my friends in the trader world, great to have you here. Thank you for coming, thank you for joining me. I want to go over some great trades I've had the last 2 days here. Very excited about them. The 27th and 28th of September. So what we did right here, this is the first one. This is the only trade I took on the 27th. And this is in my favorite spread, the bean meal, bean oil spread. So I like to be a buyer of this spread, especially here. If you can see this, our expectation for this day was down in the morning up until about 10:45ish, and then an upward move above the midline for the rest of the day. So the midline is this yellow, thick yellow line right here. So we wanted to, the spread was following the prediction. So this prediction line, as you can see, is known ahead of time. It's known in advance. So when this thing started moving down, we started getting some buy dots, which are these green dots. We started hitting the volatility bands, which are these kind of green dotted lines here. I started looking for the buy of the spread, and this exhaustion triangle I drew by hand to show a price that is a break above that high of that triangle is where we consider going long. So I did buy two right here, so I bought two spreads at that point. This is about 10:54 in the morning, and I was going to target my exit here is at just above that yellow line. So the yellow line has been known, it seems to be a very good support and resistance level. So I want to get out right where that hits resistance. So there we were. Let's move ahead one here. And this trade only lasted, well, it lasted right here is about that 11 o'clock mark where we went in. I did buy another position a little bit later on here, and then I did buy another one right at that area because I saw a good support level, break above that level. So we're in for 4 spreads. So 2 at the beginning. I moved in a little bit early here with another single spread, and I bought another one here at that point when we started seeing this midline kind of breaking up. And look at that, we ran it all the way right up to that yellow line, which is our exit. I got out right at there. I actually scaled out a couple positions as we moved up and took off some heat, but overall we had a really good positive move that day, so we're up $1,300. So this was the 27th. Now let's go ahead and take a look at the 28th. So 28th again. Now this is the soybeans versus the soybean meal spread. And right here, the prediction you can see is below the midline for most of the day on this spread. So we were looking to move down up initially into this green area, and then from about right here, which is, let's say, 10, 15-ish, downward at the end of the day. It's all supposed to be downward. So we did. We went ahead. I went short right here at that point at the touch of, we were hitting the upper volatility bands, and then we also were touching the high of the move of that day so far. Going forward a little bit, here's where I went short initially. I held on through this. I was looking for that move to continue downward. Here we had another short entry though. I went short. We were above the volatility high, the volatility bands, which are these red dots. Prediction again being downward. Our overbought cycle dots were coming into play. I went short again at that point. So now we're in for 2 spreads. You can see we're short 2 spreads here. We go ahead and the spread continued to move down, so we held on. We're moving down further. So I exited one of the spreads at that point because we got buy cycle dots coming in. I saw a little 1, 2, 3 pattern setting up. So I exited the spread here. The trailing stop was up here at this time. I did move that down. So the spread was kind of doing some shucking and jiving here. We were up about $800 at that point. I moved the trailing stop down. So there we go. We got hit on that one right here at about the 11:35 mark. We had retested our lows. We were breaking down. I was shooting for a touch of this volatility band down here. It looked really good for a short while. So I trailed my stop up to that level, and we did get stopped out on the trail. We were up 620 bucks at this juncture. Take a look now on the next trade. So this one was setting up nicely, and this is the crude oil gasoline trade. This one had a huge divergence, so it was definitely one I was watching. So you can see the expectation line. This red line is down, down, down the entire day from earlier in the day, probably first thing in the morning. That means that this spread is historically, it's below this yellow line. So this yellow line is the midline. We had moved up, strong move up most of the day, and this is a divergence. So we're going higher in the spread, but it's typically below and downward the rest of the day. So that's a good short setup. I put a rather large exhaustion triangle at that point. The spread had moved down sharply, and we were looking at it going red and green here in our short-term moving average. So this was definitely a sign of weakness. Went short right there, as you can see. I'm short one spread at this point. Let's go ahead and take a look at the next frame here. So we're short. We're gaining some equity. Things are going in our direction. I've got my target is actually down here, the touch buy right down here above the support line, which is the midline. We were up just here $300 in this spread, and unfortunately I did trail my stop because I didn't want to lose any equity past my entry, and so we were break even, plus I think we were up $120, so we made $120 on this trade. Would have been great to be out there, but I was happy with the $120. This is a big spread. Each line here is a $200 move. So you don't want to be hanging on to this one too long, because there is a big equity move just in a very short distance. So now the last trade of the day, this one set up perfectly. Again, this was again back in that same thing, the crude oil gasoline short spread here. So I got stopped out on the prior trade right at that level. I saw another breakdown. We're still predicting downward. You can see that I should have held on to it, because that support, that resistance did hold pretty well. But I went short again right there. You can see I'm short. Now this time I went in with two spreads, so we're short two spreads. That means each grid line, the black area and this kind of yellowish area, these are each $400 in equity moves. Started going down my way right away. Was happy with that. Our expectation is still downward. We're holding on to it. Target is a little more conservative. I wanted to get out if we broke through that support, that structure. And we did. We hit the target right away. Closed out that day for $13.90. Very happy with that move. And that's it. We were done for the day. So we had 3 trades, all of them winners in the last 2 days, and my equity is doing really well. Great to have you here today. If you want to learn what I'm doing, find out this approach. We're trading spreads. We're trading 2 instruments at one time. And the benefit there is that we're reducing our volatility. We're converting erratic markets into trending markets. We're also looking for reversions to the mean. This yellow line right in the middle of the chart here is kind of like our target. That's where it's reversion to the mean for that day. So when a spread moves far afield from its median, we're looking for a reversion to that price. And using a spread is an excellent vehicle to achieve that. So if you want to find out more about what we're doing, love to have you contact me, and we'll get on the phone together. Thank you so much. Have a great day.